Okay, so we're gonna look at our trade today. Once again, we go back to GBP USD. And so this is our second trade of the week. We had a buy earlier this week, around Monday, London session. We closed that Tuesday, New York session, and then we opened this yesterday and today, New York session. We have that hitting our TP. But first, I'd like to look at the dollar on the DXY. As expected, it would be going lower into discount pricing below 0.5 Fib, situated here. And so it did that, and as it touched that, it had that very strong V-shaped reversal to the upside, changing character. Not only that, breaking through that trend line that it was making with these lower highs and lower lows. And finally, at around yesterday New York session, we see that tap back into that trend line. And after that tap back into that trend line, we see that the dollar index went up aggressively, finally again into a V-shaped reversal, changing character, situated over here. And so that was a catalyst for the dollar to continue moving higher into the upside, breaking that previous swing high. The CPI news yesterday was very neutral on the dollar, yet the overall sentiment for the dollar was still bullish. With that in mind, we were now bullish on the dollar, and we were thinking because it was going higher, GBP USD would now find its way to go down. And going to the GBP USD, we see that after we had snagged that liquidity on that impulse leg down, we see that V-shaped reversal to the downside. We see if we draw a Fibonacci retracement from that swing high to that swing low, price came up into premium pricing as expected and snagged that liquidity, which is mostly seen in the 30-minute time frame. We see that there was that last descending high situated over there, and we see that after it has snagged that descending high, we see that change of character. But before that, very important, we took note of that fake out that happened around late London session on Wednesday. We see that fake out, which is usually that first move into the downside, and went up and liquidated that previous fractal high and liquidated any liquidity that was resting above here, and also liquidity in premium pricing. And after it liquidated all those early sellers, we see that price came down, broke that fractal structure, and after it broke that fractal low and created that 2-hour supply, we were now looking for that move down in line with the dollar index and in line with the strength of the dollar, even after that neutral to bearish CPI news. When it broke that, we entered right over here, and we see that towards the end of New York session, price came back up and actually retested that fair value gap that was here in the 2-hour time frame. We see that there was a fair value gap situated right over here. And if we go to the 1 hour, that was the last buy up before that change of character, which broke market structure. Price came back up to that area of supply, and then after that, at the middle of London session, we see that price aggressively move lower into RTP. Initially, our TP was situated over here below that swing low. However, we chose to get out. We moved our stop loss as well from the top of that 2-hour supply into just above that new area of supply that was created with that move down. And so for us, that was a good risk reward, especially that it also was at the weekly open, which is also a natural point of support and resistance. Also, coincidentally, that is also where those buyers would have placed their stop losses in that previous move up. And so that was it for this trade in GBP USD, and it has been quite a cooperative Forex pair this week, with all our profits coming from this move up and move down in the GBP USD.